So then, all taxpayers need to consider the tax year end. Here is a rundown on some of the things to be aware of generally, and also a couple of property related ones. So the 5th of April is the tax year end. That means on the 6th of April, anything you do will be in the next tax year. So what you need to do really is decide or calculate whether you think your income is going to be higher for the current year or next year. And once you know that, you've then got some options. So first of all, not relating to your tax, ISA allowances, get those used if you can. Capital gains annual exemption, you get an exemption for each tax year. If you haven't used this year's and you can, then you should consider it. If you've used it already and you've got a sale about to happen, push that sale after the 5th of April if you can, and it'll fall into next year. It uses next year's threshold, next year's allowance. What about things like pension payments and charitable donations? They both are ways of helping you to reduce your tax bill. But again, you've got to consider when you want the payment to arise. Now, if you're going to pay all of the money you can every year regardless, it doesn't really matter. If, however, you're going to make a one-off pension payment, then you should really try and get it in the tax year where it's going to have the most impact. So I mentioned earlier about working out your income for the current year and next year. Well, pay the pension contribution to arrive or land in the year where your liability is the highest. Same goes with the charitable donations if possible. Also, if you have any play or any say over when you get your income from a company, for instance, you need to work out whether you want income to be drawn in the current year or the next year. Now, bonuses, salary and dividends can all be used by limited companies to pay the people involved in them. And again, you need to bear in mind what your tax liabilities are. Now, for landlords, you might also be incurring expenditure on things like refurbs. If you've got the option to incur an expense in the year where your income will be higher, you will save more tax. Now, what that might mean is you might be about to finish a refurb and you're working on the cash basis, which basically means your income and expenses are based on when you pay something and when you receive it. But if you haven't made any money anyway this year, but next year you're going to be a higher rate taxpayer, making the payment fall into next year will save you more tax. It's nice and simple. The same happens in reverse. If you think you will have no income that is taxable next year, or you might only be taxable at 20%, but you're a higher rate taxpayer this year, then you want to accelerate the payment, get the payment into this year. So yeah, there's plenty to think about. If any of this doesn't make sense, just reach out. I'll gladly help.